Hello, legends. Welcome to my chat. In this video, I'm going to show you how I personally trade using mechanical models. You see, so without wasting any time, let me just introduce you to mechanical models. See, so on our mechanical models, we have what market maker sell model, and also have what market maker buy model, just like this. You see, so guys, in order for this model to work, or in order to confirm whether this thing is a market maker sell or buy model, first thing first, you have to go to where you have to go to your higher time frame. You see, you have to go to higher time frame. On higher time frame, this is what you're going to be looking for. In just higher time frame, this is what you're going to be looking for. First thing first, you're going to be looking for what? You're going to be looking for your trend, whether the market is going up or it's going down. You see? Then the other thing you're going to look for what? Point of interest. So guys, I know that there are so many points of interest out there in the world. You see, oh, some are floating here on YouTube. You see, but then I'm going to focus on my main trade. You see, which is number one is what? Order block. Ne? Number two is what? FVG. Ne? Then number three is what? It's my breaker block. These three are the points of interest that I use: order block, fair value gap, and breaker block. You see? Okay, let me just show a quick example of what is a market maker sell model. You see, first thing, I'm going to show you a market maker sell model. Let me just do it over here. My what? My market maker sell model. You see, let me just show you how it works. Before I continue, guys, make sure that you watch this video from the start up until the end, because you do not want to miss anything. This thing of you guys keeping videos when you are watching them, it will mess up your trading skills or your trading journey. Make sure that you listen to me from the start up until the end of this video so that you can get a full understanding of what is a market maker model. You see, okay, market maker sell model, market maker sell model. Let's just say on your high time frame, the market is going down like this, making a series of lower lows and lower highs like this. You see, just like this, and then it does what? It leaves a point of interest, which is a fair value gap over here. It can be a fair value gap over here, or what? Um, or a block over here. You see, or an order block over here, and then or what? A breaker block over here. You see here, or a breaker block over here. You see? Remember what I said? It can be what? Order block over here, ne? Order block over here. Can be your order block over here, your what over here, your breaker block over here, or it can be your what? Your FVG over here, which is a what? Point of interest or points of interest. You see, FVG over here. So when it's like this, expect the market to do what? To tap inside the fair value gap and continue its original direction, or the market to do what? To tap inside your what? Your breaker block, then move into its original position, or the market to do what? Or the market to tap where? In your order block, then move into its original direction. You see? As simple as this. You see? Let's just say like the market, you see this point over here, this one whereby the market turns. You see? Let me just do what? Let me just show you something over here. Let's just say like this one is your high time frame, eh? Then on your lower time frame, let's just say like the market is moving like this. You see? On that reversal, you expect to see the market to consolidate, just like this. To consolidate, you see? Then move away from your consolidation. You see? You see? Then bam. And it does something like this. Whereby here it does what? It tapped inside your point of interest over here. This one will be your point of interest, this one. Whereby the on your lower time frame, the market is going to consolidate, run away from the consolidation, consolidate again up until it taps inside your what? Point of interest. Then it moves back to your original direction. You see? So to summarize everything over here, the market on your lower time frame, it has to consolidate just like this. It has to consolidate just like this. You see? After consolidation, it runs away from your consolidation, taps inside what? Your point of interest, then goes back into what? Into original direction. Whereby this one is going to be what? Your consolidation or your accumulation. In simple terms, this one is going to be your accumulation and then manipulation, which is this one over here, and then manipulation, and your what? Distribution, which is this one over here. You see? So guys, when you're using your market maker model, make sure that you find like a good like timing on what time do you want to trade it. you want to trade on a London session? Do you want to trade on New York session? That's up to you. But then if you're going to trade on Asian session, I highly advise you to use it on like JPY pairs. Do not use USD pairs, because USD pairs they are more likely to move on London session and also New York session, not during Asian session. Because around Asian session, that's where the market accumulates the most. You see, this one is a mechanical sell model. You see. So guys, if you don't know what is a order block, breaker block, fair value gap, check my previous videos. There are some videos of mine where I explain all of these things. You see. So let's move to what market maker buy model. Market maker buy model. You see, hey guys, if you are still watching this video, make sure to drop a sub, a like, and also a comment. You see, and tell me whether this information is helpful or not. You see. So let's just say on your higher time frame, the market is going up like this. You see, on higher time frame, making a series of higher highs and higher lows like this. Then again, here there's a what point of interest over here. Can be of a what? Order block. Order block. Breaker block. Or your what? Or your fair value gap. Or your fair value gap over here. You see? Whereby you expect the market to do what? To tap in one of your what point of interest. Either to tap on this fair value gap, then go back into original direction, or breaker block, go back to original direction, or order block, then go back to original direction. You see? Just like this. So on a lower time frame, this movement is going to look like something like this. Let me just show you real quick. It's going to be look like something like this. Do you see this movement? It's going to look something like this. Let me just show you here. You see, like the market is going to go up like this, then it consolidates, and then running away from the what consolidation, tapping inside your point of interest, then gives you something like this. Market structure shift, and you enter from the favorite gap. Then yeah, it goes up just like this. You see? Whereby here it's what your point of interest, one of your point of interest can be fair value gap, order block, or breaker block over here. You see? So in this thing, to simplify it, we expect something like this. Accumulation. You see, the market accumulates, which is a consolidation. Né? So consolidation, then manipulation, then yeah, just like this. You see? These are the things that you have to know. For now, you can take a screenshot or or watch this video up until the end, guys. So yeah, we are done looking at the examples. So right now, let's go to the actual charts. You see, so guys, I'm not prepared for this thing, but then I'm just going to show a few examples of this model. But then this is what the market maker model looks like. You see, let me just remove drawings and bring back my kids. Bam, okay. I'll start chatting with you guys. I'm not prepared for this, so hey, please, man. Okay. All right, guys, we are here on our 1 hour time frame. Let me just make a quick example on our current market. You see, you are here on our 1 hour time frame, which is my high time frame. You can see that the market is going down because you see change of character and also break of structure over here. You can confirm that the market is moving down. You see, but then if you don't know what is a break of structure or anything else, you can go to my previous videos. You can see those things up there. You see. What do we have here with a fair value gap, which is my point of interest, this fair value gap over here. You see, whereby I expect the market to tap inside my fair value gap and continue going downward. You see, let me just do something like so that it can see it. You see here we have a fair value gap. So when it's like this, I go to my time frame, which is my it can be my 5 minutes or 1 minute. Let me just go to my 5 minutes time frame. You see. Okay, it's loading, guys. Okay, we're here on my 5 minutes time frame. You see. What happened on my 5 minutes time frame? The market did what? It went inside my thing over here. You see, it went inside my point of interest. But then I don't see any consolidations. You see, when I don't see consolidations like this normally, actually we do have a consolidation. Check here. This you can confirm that this is a consolidation. As you can see, the market is consolidating like this. You see. So I expect the market to do something like this to clear the liquidity above this consolidation, and After clearing this liquidity, then it moves back to what? To its original direction like this. You see? That's number one. You see? Okay. So around 5, I'm expecting to sell Nasdaq. See? Let me just check another examples for you all. Let's go back to our what? But then this time let's use 15-minute time frame, which is also a higher time frame anyway. You see? And let me just use like a higher time frame that is nice. That remember, guys, analysis on a higher time frame, it results in a high probability setup. You know? Okay, let me just go to my 4-hour time frame. Ne? Okay, restart chart view. Okay. Remove drawings. So here on our this one is our 4-hour time frame. You see, what do we have here? We have a fair value gap. You see, with a fair value gap over here, and that here is where the market is currently. You see, with a fair value gap whereby the market did what? It ran away from our fair value gap, but then you see on this one it also gave us what? Consolidation here on our same time frame as what as, as where the trend is. Actually, we have a consolidation here. This one is our point of interest. This one over here, let me just label it as point of interest. Let me just say OTE ones. You see, we have our point of interest over here, and currently the market is inside our point of interest. Remember what I told you like last, that I expect the market to clear liquidity, then go back down a little to clear some liquidity below, then go back way upwards. You see, as you see over here with a fair value gap, ne? Fair value gap plus what? Plus an order block over here. You see, the market tapped our order block, then it gave us a clear rejection to the upside. You see, when it's like this, remember 4-hour time frame, on as well on a 15 minutes time frame. We saw our point of interest on our 4-hour time frame. Then we go to where? To our 15 minutes time frame to look for confirmations to enter the market, and also, yeah, to see what does the market do. You see, this thing, let me just highlight it as like a fair value gap. Okay, FVG. Okay, let me just, okay, you see this blue thing over here? Yeah, blue rectangle is my what? My fair value gap on my what? On my 4-hour time frame. As you can see here with a consolidation, and then the market moves from this consolidation going downwards. You also have what? Another consolidation over here. See, consolidation over here. This one. You can say that this is a consolidation. You see, then the market moves away. Then after moving away, guys, you see what happened? It tapped inside our point of interest together with what? Our order block over here, which is our what? Another point of interest on our 4-hour time frame. You see, let me just select order block, which is our point of interest. You see, so when it's like this, guys, I expect the market to do what? Remember what I told you? I expect the market to clear this liquidity, this fair value gap over here. You see, then from there, I will expect the market structure shift. Then the market, it goes up like this. You see, this is what market maker model is, guys. According to me, this is how I personally trade. So please do not confuse my trading skills and some trading skills of your me to well. Okay, let's go to another pair. Let's just use USD Okay, first thing first, we go to high time frame. I've been getting W's, guys. We can even check my things, guys. Are like, yo, we are playing. Check. Let's just go to a 1 hour time frame. We can also check, guys. I'm not playing here. I'm not playing. Check. Order block. This one. You see? Check. But then this trader didn't take it. I don't know why. But then, yeah. Check, guys. Order block. Market tap inside my order block. Then short back up. Liquidity. But then, yeah, we're not talking about that thing. Okay. Let me just remove drones real quick. Okay. Let's just go to our 4-hour time frame so that I can show you some other examples. 4-hour time frame. What do we have here on our 4-hour time frame? You can see that the market is going upwards, né? Then with what fair value gap, which is this one over here on our 4-hour time frame. This one will be our point of interest. So basically, we expect the market to tap inside our what fair value gap, then move into its original direction. It's like this to go to what 15 minutes time frame, as I said. Let me just restart the chart view fast. You see, here we are on our 15 minutes time frame. The market did what? Here, you see, this one is a consolidation over here. We had what? Consolidation over here. You see, this one is a consolidation. And also here, we also have what? Consolidation. Then the market tapped inside our point of interest, which is this one over here. But then it tends to what to break away actually from this point of interest. That's why I'm saying that you must look for confirmations on a lower time frame in order to enter the market. You see, if I were you, I was going to enter the market where here exactly when I saw what market structure shift over here. You see this one, where the market structure shift over here. See, then what a fair value gap, a big fair value gap over here. See, fair value gap. So like being honest, I was going to enter from where? From this fair value gap, guys. You see 50% of the fair value gap. 50% of the fair value gap. Then my stop loss going to be where? This low over here. Then target, I don't know, target higher stuff. So 1:2 risk reward ratio. So guys, yeah, this is how far I will go on this video. More examples are still coming on my TikTok. Make sure that you go to my TikTok and do what? And also follow me there. My AG, follow me there, guys. So yeah, guys, I'll see you on the next video. Thank you. Peace out. Before I go, guys, did you understand this video or not? Tell me on the comment section. You see, I will make more examples about these things. Thank you.